Welcome to another webinar by DoorLoop. My name is Barak Levanon. I'm the VP Growth for Honeycomb. I'm a leading insurance provider for landlords and condo associations. And today we're going to talk about landlord insurance. On our agenda, we're going to talk about Honeycomb, go over the basics, cover the differences between homeowners and landlord insurance, and finally wrap up with tips and misconceptions. I see some people have joined. That's great. So let's just dive in. So a little bit about Honeycomb. So Honeycomb is an insurance provider, is a tech-forward insurance provider that specializes in single-family rentals, apartment buildings, and condo associations. We work with agents, but we also work with investors directly. And by leveraging some really smart tech, we're able to provide up to 40% discount on premium compared to other carriers. We were founded in 2019. And we're currently live in 12 states across the Midwest, West, and East regions of the country. And by the end of 2023, we're planning to cover 80% of the country. Why did we launch Honeycomb? So Honeycomb was founded by really smart people. We're trying to solve three main problems. The first one is that a commercial property, and you might not think you have a commercial property, but once you invest in real estate, you own a business. It doesn't matter if it's an LLC or it's written under your name, it's a business, and you should treat it as such. So commercial property insurance requires a unique approach and understanding of the market. We'll go more in details regarding that. But what we've seen in the last few years that most people who buy their first property, it can be a single family rental, would usually go to their home and auto insurance agent who is not very familiar with commercial property and commercial property insurance. And we thought we need a unique product that would fit the market. Our goal is really to revolutionize how insurance is being purchased, underwritten, and managed. And what we did is we've developed a digital platform all-in-one that a customer can log in, a customer or an agent can log in, answer a few basic questions, and then get a quote for his or her investment property. The whole process takes less than 5 minutes. We pull some very smart tech in order to understand the risk that is associated with a given risk, taking off a lot of different questions that are being asked today by other carriers. And by doing so, we're able to provide the right coverage, but also the right price for any given risk. All right, so before we dive in really into the big stuff, let's cover the basics. So what is landlord insurance? So you can think about landlord insurance as a homeowner insurance, but strip off all the personal belonging and what we call walls-in coverage. So a landlord insurance is basically a type of insurance that is specialized for property that are rented out. That's super important, and we're going to cover that later. So if you have a primary residence and then now you have a secondary residence, or you moved out from your home and now you're renting out your old home, you're now a landlord and you need landlord insurance. You don't need homeowners insurance. We're going to cover that. The insurance part has two main parts. The first one is property or dwelling. The second one is liability. Property. So property is, to simply put it, is the structure. You want to make sure as a landlord that your property is being covered. So if you have a tenant in your home who is buying your renter's insurance, he's covering his own personal belongings, appliances, clothes, what have you. But as the owner, as the landlord of the property, you are responsible for the structure itself. So, for example, if a wind and hailstorm hit your area, damage your roof is now leaking, you need insurance to cover that. The tenant is not going to pay for that. You need to pay for that. And if you do not have insurance, you'll need to do that out of pocket. So that's the property side. The roof, water damage that is not associated with your tenant, heating, everything that is related to the dwelling and the infrastructure of your property. That's the big part of. That's 80% of the landlord insurance policy. The second part is the liability. Liability insurance, to simply put it, is protects you from being liable to damages that occur within the premise of your property. So, for instance, if someone slipped and fall, he can sue you as a landlord for the damages slash medical expenses that are associated with that injury. That usually sums up to 20%, and it's super important to have that within your policy. Most policies come with the property section and liability section combined together. Great. Now let's talk about homeowners versus landlord insurance, because I think that's the biggest misconceptions that we see within the market, especially from first-time investors or buying their first investment property or moving out from their home and then renting out their home and keeping their homeowners policy in place. So a standard homeowners insurance typically excludes a lot of important coverages that you need when you start renting out your property. So, for instance, let's say there was a damage to the property and now you can't rent it out. A homeowner's policy will not cover that. A landlord policy would cover that. Based on statistics that are found on the web, we know that 50% of rental properties started out by being the primary residence, as I just mentioned, and a lot of them still keep the homeowners policy. They think they need homeowners policy, but they actually need landlord policy. A rental property, once you have a rental property and you operate that, you need to treat it as a business. If it's a short-term rental, most people will say, yes, I do. I have a short-term rental. It's a business. It's very much like a hotel if it's a Airbnb or Vrbo, but also for long-term rents. That's a business, and you need to have a business coverage tailored to that for different types of coverages. The differences between homeowners and landlord policy insurance. Three main differences. One, standard homeowners insurance typically exclude a lot of the coverage that you need when you're renting out the property. Number two, the rental property that originate from primary residence do not include coverage for you if you rent it out. So if you keep your homeowner's policy and you do not inform your insurance carrier that you moved out of the property and now you're renting it out, you will not be covered in case of losses or claims. That's super important. And you need to think of it as a business. When you buy an investment property, you do all the math, you do all the calculations to understand your cash flow. It's exactly the same when you buy an insurance policy. You need policy that will cover your business, not your home. All right. Now, if we go down one flow to understanding how a landlord policy looks like, the most common topic that we see coming from investors is the difference between market price and rebuilding cost or replacement cost. So market price is the price that you paid for the property or is now worth. Okay, so most people when they've been asked how much did the property is worth, they would name the market price, 100K, 150K. Whereas the rebuilding cost is the cost that is associated with the demolition and rebuilding the property in case of a total loss. And that's very different. Most cases, in some areas, the rebuilding costs will naturally be lower than the market price. That's how economics work. You buy if you buy a land and you build a property and then you market it, the market price should be higher than the rebuilding cost. That being said, in other areas, due to many factors such as inflation and the rise of building cost materials, the rebuilding cost might be higher than the market price. So it might be that you bought a single family rental in the Midwest, for instance, for 70K. It's worth 70K. You can sell it for 70K. But if you want to rebuild it, if you need to rebuild it, that's going to cost you 150K or 160K. That cost is being evaluated by a few companies that specializes in understanding that rebuilding cost. And when you go and buy insurance, it's super important to understand what type of coverage are you buying for your properties. Most carriers, including Honeycomb, will require you to buy coverage based on the rebuilding cost. That would be again the cost that is associated with the total loss. So if a fire burns out accidentally and your property is now at a total loss that needs to be rebuilt, that rebuilding cost will be paid to you by the insurance carrier. And that's the most important part that a customer, a landlord, needs to understand when buying coverage for a property. Now, to make things a bit more complicated, most insurance claims will not be a total loss claims, right? Only 3% of fire claims are due to total loss. Most of them will sum to 10K, 15K, 20K. I need to replace a new roof due to a wind and hail storm. That's going to cost me 10 to 15K. I don't need to rebuild my property. But when an insurance carrier, and they're all the same, will come and assess your claim, it will be based on the rebuilding cost or market price that is associated with your policy. And that's very complicated. It's not straightforward. But if the rebuilding cost that is associated with your policy is lower than it should be, you might not get the full amount of money that you need to, again, repair your roof or any other damage or to cover any other damage that happened to your property. So again, the market price is the price that you paid for your property and the value of your property within the market. The rebuilding cost, replacement cost, is the amount of money that you need to rebuild your property. What you need to do as a responsible landlord is to make sure that you're covered on a replacement cost basis, and the replacement cost basis is accurate. How do you know what's a good replacement cost? You don't, right? None of us are expert in understanding demolition costs and building material costs and workmanship and so forth. But that's why you need to go to your insurance carrier and ask for a quote, and they will recalculate or calculate that replacement cost that is needed. The most important thing or the most important advice that I can give you is not to compromise on the replacement cost. That's the single most important thing that you need to know and understand as a landlord. You need to be fully covered by that amount. If you're not, you're underinsuring your investment, your business. Again, it is a business. And if you file a claim, you might not get the full amount that you need to get as a landlord. Um, hope that's clear. We'll be happy to answer more questions regarding that. All right. So as I mentioned, when you start renting out your property, you need to think of yourself as a business owner, and you need to change your policy from a homeowner's policy, if it is such, to a landlord policy, and inquire through an agent or online for landlord or commercial policy. Yeah. The challenges with finding the right insurance. So insurance is often seen as a necessary evil, right? None of us really likes insurance. It doesn't matter if it's auto insurance or homeowners insurance or landlord insurance, and we just want to get over and done with it, right? And that's a big mistake, because if you shop around, you can save tremendously on your premium. But you just need to devote some time to it, or have an agent work work it out for you, and understand the basics of insurance. Again, a common misconceptions that we get and hear a lot from insureds is, I can't save on my insurance. All companies are pretty much the same. Now, that's partially true. The insurance that you eventually buy, from a regulatory standpoint, it is quite similar, but rates do differ. And if you go and don't do your homework, quote unquote, um, properly, and search for the right coverage, and search for the right company, that will able you to get the right coverage at the right price, you're missing out on some big savings. And insurance isn't cheap. It's been going up year over year for the last 5 years or so, and it's taking a lot from your NOI as an investor. The second thing, which is super important, is really to understand the coverage, and most importantly, the replacement cost that I just mentioned. When you compare two insurance quotes, you need to understand the replacement cost. You need to compare the replacement cost from one carrier and the replacement cost from other carriers. Now, it might be that you get some savings, $100, $200, less on one quote, but if the replacement cost is significantly lower there, you're missing out and you're underinsuring your property. So you don't want to think about saving at any cost for your insurance. You need to think about shopping wisely and saving on premium with the same replacement cost that you currently have or need for your property. To recap the misconceptions, if you have a rental property that is covered by a homeowner's policy, you need to change it to a landlord policy. That's number one. Number two, yes, it is important to get a landlord policy for that. And three, replacement costs, replacement costs, replacement costs. If you understand replacement costs, you understand 80% of what you need for your landlord policy. It's pretty much the same for homeowners policies, but that's the most important thing that you need to understand. One small anecdote to before we finished. So we had a case with an investor with 36 properties. I assume that some of you have more than one or two or five, but 36 single family rentals in the Midwest was just poorly covered. And he didn't even know about it. 36 properties covered into within a single policy. The reason I'm saying that is because you don't need to be afraid or shy about asking about insurance. Even big investors with many properties, multifamily properties, or single family properties do not know a lot about insurance. That's why you need to be educated around that through talking to an agent again, or speaking to insurance carriers such as Honeycomb to get the right coverage and understand exactly what you need. Okay. Thank you so much for attending. I'll be happy to answer any insurance question that you have. Feel free to reach out. My email is right there, honeycombinsurance.com. Go and visit and get the right coverage that you need. Thank you.